Hello, everyone. Welcome to the April episode of BDO's PE Market Pulse, where we invite a leader in the private equity ecosystem to share their thoughts on current market activity. I'm your host, Bram Mundi, National Leader of BDO Canada's PE Practice and Assurance, and I have the immense pleasure of having Deborah Dobson, partner at Peloton Capital Management, join us today. Peloton is a Canadian private equity firm that invests in the healthcare, financial, consumer, and business services sectors across North America. An accomplished senior leader, Deborah has over 20 years of experience in both private equity and Fortune 200 firms, with extensive knowledge of the healthcare and life sciences sectors. So welcome, Deborah. It's a pleasure to have you here.
Thanks for having me, Bram.
Thank you.
Pleasure to be here.
Healthcare is such a dynamic sector with lots of activity both on the traditional diagnostic and patient care services, as well as life sciences in general, and with varying sizes of players and their evolution in both these sectors. So this will be definitely an interesting one. So let's head straight to the questions.
All right.
The first one being healthcare in Canada has always been a hot topic, but recently there's been more visibility or perhaps opportunities with the gradual demographic changes, as well as investment strategies of roll ups, along with AI and big data coming into play. So, how do you see 2024 and perhaps even a broader outlook of healthcare shaping up for private equity firms and their investment thesis in the healthcare sector?
Yeah, well, I think it was a good entry, Bram. You're right. I mean, the demographics and the macro factors around healthcare, remain robust. This is a market that has demand, and as we all know, sort of acyclical demand, and that's one reason why we all like it so much. And then we all know the aging demographic story, just as you said. So I think when you think about healthcare as a sector, it's broad. Life sciences, you roll those together ish, and healthcare, life sciences, these are very broad sectors that are serving all of us. So it's robust. There's strong demand. The issue in Canada, issue and opportunity in Canada is, I'd say, there's unmet needs in the market demand. So because of that, there's an increasing opportunity for providers to do more efficiently to serve the market and their needs. So that's what gets us pretty excited. Just the profile of the sector, the growth dynamics around it. I'd say the other piece here is just the need for innovation. I mean, we all know the headlines. We all know, and quite frankly, Canadians, we too often benchmark our cost of healthcare and our delivery relative to the U.S. market, and that's one of the worst benchmarks to do it. They have one of the highest costs. They have one of the highest costs to serve per capita in the global market. So we should be looking across the pond, and knowing that should just make us all feel more inclined and motivated to go for innovation and more effective delivery and services. So in my mind, because of that, there's a ton of market need, and there's a ton of unmet market needs, as well as there's a need for innovation and productivity improvements for us to do better. So that gets me excited about 2024, and it gets me excited going forward.
No, that's perfect. I love that you mentioned that comparison to the US because you're right. The comparison needs to be a little bit to the east rather than to the south.
Correct.
When it comes to innovation and life sciences, there was a play, in the past, strategy of emerging life sciences who are innovators in the R&D space. They would enter into collaborative agreements with big pharma and ultimately exit with that big pharma. Now that these new technologies and the mass availability of these new technologies coming into play, any trends or changes that pique your interest?
A lot. I mean, I came from a company, a public company, as you alluded to in the intro, called Danaher Corporation. They're Fortune 200. They are a routine acquirer and a serial acquirer in this space. And quite frankly, there's a ton of innovation again, a ton of unmet need, and a ton of emerging technologies. So be it single cell analysis, be it genomic therapies, let's go down certain therapeutic areas. There's just a ton of opportunity, and it's a very exciting space because it's quite dynamic. And because of that, the models have changed from so historically, just as you said, big pharma would wait for technologies or ideas to develop and mature and be proven out, and then gobble up. And that's the same thing with life sciences tool providers, the scaled ones now, like Danaher and Thermo. They'll do the same. But you also now have a very outsourced market, a very outsourced market of service providers. As we all know, how much big pharma has so much of their market now, so much of their services and their core value chain outsourced. So that provides runway for innovative players, to actually not necessarily go through that standard trajectory they used to go to, where they would wait, size up, and then get taken out when they were 200 million or so in size, by big pharma. I think there's actually other avenues you can, and also, by the way, because you have unproven technologies, genomics, single cell therapeutics, many other therapeutic plays, that you could be the winning provider without necessarily being taken out of the game too early. So to me, that's a pretty dynamic and interesting space that should challenge players' thinking on their business models and how they want to engage with the larger providers going forward, to make sure they maximize the outcomes for themselves and their businesses and their stakeholders within the business.
Oh, that's amazing insight. So when it comes to traditional healthcare, let's talk about diagnostic labs, patient care labs, those kind of services. What are the key issues or challenges that you come across in this industry?
Yeah, I mean, the other piece in the introduction, I spent 9 years on a hospital board, exited as their chair right when COVID was very much in force. So in 2000, I exited, 2020, by the way, not 2000, exited as the chair. So I've seen healthcare many different ways. Again, as an investor, as a partner in private equity, as a board member, I'm evaluating hospitals and the need there in a fully publicly funded model. And I think what I said at the onset, there's a lot of unmet need. There's a lot of requirements here for us to improve our service delivery models. So for us to treat Canadians faster and more efficiently. So when I think, and then of course the labor dynamics, again, we've all heard the headlines. This is not going away. We see that in our businesses. You've got scarce labor, and that's everywhere from technicians through to nursing, through to physicians, through to dentists, whichever your key practitioners are. So again, the more you can make those providers put their efforts where their heart is, quite frankly. So if you're a fertility specialist, you're doing what you've been trained for, versus maybe some of the onboarding work that other providers could do to help you. And this is the same thing within surgical. You name the specialties. The more we can help folks, the key producers, focus on their core activities, the more efficient we can be. So that's where we spend our time thinking about that. And if you're introducing new technologies, if you're introducing new providers who can, and carving up the work stream and activities, that's how we think about it. So we can improve quality of care, improve our efficiencies, improve our cost of care. It's all around, quite frankly, serving patients better and driving for better outcomes. And this is true in the public sector. Hospitals as well, they've got to rethink. And I was in a hospital that challenged their thinking around, we all hear about it, alternative level care patients, a lot of folks that don't know how to exit the hospital system once they're in there. We were really challenged, and we created a whole network around home care and home care providers to help folks transition more efficiently and effectively back to their homes where most people want to be. And again, that was the healthcare system reaching out to work more effectively, quite frankly, with the service providers and the fragmentation of the market.
Yeah, the distinction between acute care that's required within the hospital versus rehab care that may not be required within that hospital, right? Like that is always that demand of where to use your resources most appropriately.
That's right.
So, talking about Peloton specifically, and Peloton focuses on North American companies with EBITDA ranging from 5 to 40 million. So outside of these traditional metrics of financial information, what are some of the other key attributes that Peloton looks for with their target companies?
Mm-hmm. So growing businesses in dynamic sectors, right? Again, healthcare, financial services. Our sector focus and strategy is broad, so therefore, when it comes to our subsector focus, I mean that's where we really hone into. So again, we like buy and build type of platform. So often multi-site businesses, not always, but we also like subsectors where there's a lot of attractive profiles and attributes to those sectors. So demand, cyclicality, things that we all recurring demand. So all the things that you can imagine that make sectors favorable, that's where we spend our time and effort. Again, multiple dimensions of growth. As much as we have buy and build platforms, we also seek businesses that have really strong organic growth and opportunity around them. So if you think about something like fertility or even dentistry, there's technology is introducing new opportunities and or innovation around fertility, is introducing new opportunities to introduce more technologies, improve the results for patients. So that excites us when it's not just a buy and build platform. The other piece specifically with Peloton, by nature of where we focus from, we've ended up by and large backing founders. So again, these are businesses that are founder led, have strong entrepreneurs who developed a business, developed their story, and then they need partnering to help them sort of accelerate or inflect for their next phase of growth. So someone that needs a partner like ourselves and our capabilities to help them take their business to the next level, that appeals to us. Strong management teams, of course, that goes hand in hand. And the other piece is the partnering model. We're partners to our founders, but what's important to us is often in our healthcare businesses and in our financial services businesses, which are insurance-led, insurance brokers as well, but I'll go back to healthcare. That's our key topic today. We want to partner with the dentists. We want to partner with the doctors. We want to partner with the nurses, the key producers. So for us, often most of our businesses have a partner share model piece in that too, to keep really strong alignment between Peloton, between the management teams, the founders, as well as the key producers who are driving these businesses. That's really important characteristic for us as well. Payer mix would be the last piece, of course, another dynamic and attribute. We tend to focus more where public funding is not, and that's intentional. We're a private provider, of course, but also a private investor, of course, but also, we want to serve the market where, as I said, the coverage doesn't exist, where we can help grow and again serve Canadians better.
Yeah, well, whatever is underserved by the public funding.
Right.
Yeah.
And last thing, I would just say, as a platform investor, we're backing businesses that there's a reason for them to consolidate, back to buy and build. So we're always interested in that profile of a business where they've been able to show that they're creating value, be it with customer results, engagement, service results, and engagement, patient experience, patient outcomes. Or quite frankly, our key producers, just making their lives easier so they can focus again on their practice, what they do best, delivering medicine, serving their patients, and then we can help them, quite frankly, take away some of the business headaches that we've got more experienced professionals addressing.
Yeah, no, that makes complete sense. So, final question before our lightning round.
Okay.
We understand that Peloton is a member of the United Nations Principle of Responsible Investment, and it's firmly committed to integrating ESG factors into your decision-making, risk mitigation as part of your overall strategy for generating superior long-term returns. So with that lens, and with all the upcoming ESG rules and requirements that are coming into play here, how do you see it impacting healthcare industry and your portfolio, or would it impact your portfolio?
Yeah, I think ESG is and quite frankly the broader expectation for businesses and how they interact with all their stakeholders, not just their shareholders, it is increasing the demands and expectations. So that's how we look at it. So as a PRI signatory, and we just did our first filing, the way our strategy and our approach to ESG at Peloton was really, let's start with ourselves and quite frankly our portfolio of businesses, understand their base level performance in their core ESG factors, and we decide what the core ESG factors are relative to their business. Climate is a tricky one, quite frankly, for our businesses that aren't key climate contributors, but there's energy consumption. So we get very focused on the factors. We baseline them, and our goal, quite frankly, is just as we're a partner with these teams and with ourselves, we want to improve upon the factors. So most of our businesses are services businesses, Bram. So we spend a lot of time in the S factor, so the social factor of ESG, and where we think about obviously diversity, equity, and inclusion metrics. We focus on representation. We focus on employee health and safety, very important in healthcare, and very important engagement factor for healthcare. We focus on engagement with the providers and workers, because again, an engaged workforce and respected workforce will drive the desired outcomes that we want as key stakeholders in those businesses. On the environmental side, as I said, it's a little bit of a lighter touch, but then when you think about single-use medical waste, and again, just improving our footprint and reducing our footprint, and it's usually around those type of very specific factors that we're trying to benchmark and then improve upon. Maybe energy consumption, but again, that's not the biggest. For us, it's more around waste management and hazardous waste management. and responsible disposal and handling of that. And then I would say on the governance factor, I mean, again, we come in and partner. So that's one of our key pieces we want to do alongside these founder-led businesses to just help them improve their risk management and their governing of their businesses, right? And that's a key piece we lean into as well.
Yeah, and I mean the fact that you're the transparency in reporting also sheds light on accountability, right? So it's a part and parcel of the process with ESG.
Right.
Okay, so some lightning round questions. Just very quick round here. Best source to stay up to date on market dynamics or market intelligence?
I forgot about this one. I don't know if I have a best source. I actually go for multi-sources. So standard business publications that everyone usually would seek, I certainly do that. And then depending on industry sector, I'll hone in there. Quite frankly, and I actually have always found that the most insightful is often those that are closest and these niche, be it bloggers, be it whomever's decided to cover the fertility industry, et cetera. So I'll kind of hone into that, and then regulatory association bodies. So kind of be very specific, sort of start broad, and then I hone in on the sectors that we focus in to try and find the chatter.
Yeah. No, you go into the hole. Into the hole. Yeah. If you had to invest in a healthcare company right now, what subsector would you choose?
Any of the ones we're currently in, but if you had to make me pick another one, Bram, I mean, I think businesses that are outside of infrastructure, so home health is something that's interesting to us in the sense that, again, we can't catch up with the need with the aging demographics just from infrastructure. We all know that there's so what can we do there to help serve an increasingly unmet need market and sector? Another one is similar vein. Ambulatory surgical centers, so ASCs, they are not well developed in Ontario. They are more developed in other markets in the Canadian market. And again, if you think about hospitals and the pressures they have, the infrastructure pressures are increasing growth, and population demands. Those type of institutions appeal to me because there's going to have to be outflow, and there's going to have to be some more efficiencies being had for certain procedures outside of the four walls of a hospital. So those are the two sectors that interest me.
Perfect. Yeah, there needs to be a little bit of correction in that space. Yeah. And first thing that comes to mind when you think of AI?
Oh, creepy, but potentially, how to use it efficiently, how to use it to make us be better, quite frankly, and how to stop doing dumb work.
Yeah, productivity.
That was better said.
And finally, current recent book that you read that you would like to share?
Oh, I'm currently reading, Covenant of Water by Abrahamson, I believe. So I don't know, 450 pages deep into probably a 650-page book. I would recommend it. It's a great book.
Perfect. All right, so that's a wrap for this episode. Thank you, Deborah, for joining us today and providing your amazing insights regarding healthcare and life sciences sector. This was great.
Thanks, Rob. Pleasure to be here.
Thank you.